right, surviving in '09, CBS 11 helping to give you the financial information you need to survive in '09. It's a tough year. Despite the bad economy, it's not all doom and gloom. There's even reason for some optimism. My old friend Ed Butowsky is a managing partner, easy for me to say, Ed,
right.
Chapwood Capital Investment Management. Thanks for being with us.
Absolutely.
Nice to see you again.
Great to be here.
Let's begin with what's currently happening with the stock market, and what do you think we should be careful of?
Well, first of all, there's going to be a lot of ups and downs at this point, because anytime you go through a time like this, there's a lot of volatility.
Yeah.
I expect from this point, after a big rise from where we were, to start to see this market creep down a little bit. But I believe by year end, we're probably going to be up somewhere around 20–25% from where we are right now. But this is what scares me.
Okay.
There's a lot of bad advice being given. A lot of brokers right now, a lot of financial advisors are advising their clients because they need to make commissions and they need to earn fees to buy into fixed income. And Mr. Inflation's coming. And Mr. Inflation, when you print so much money, you're going to see the value of assets go down in terms of tangible assets. Excuse me, let me restate that. When inflation comes back, the value of bonds are going to go down. And when that happens, we're going to have a big problem out there.
And you say particularly with these fixed income funds.
That is right. So people must have some things that can grow. They must have some equities in their portfolio, and they must get those sometime pretty soon.
Okay. What does history tell us about the future and what we should say? You know, you have said, I've heard you say before, when are we going to be able to exhale?
Yeah, well, right now, I think people can start to exhale, okay?
Now?
Absolutely. Things are not going to get that much worse than they are or that we've already seen.
Okay.
But history tells us that after we've gone through times like this, we've seen the market, the stock market, rebound quite a bit. For instance, you see some numbers out there that about 24% after the first year after something like this had happened.
Okay.
And then for each year, for the next 3 years, it's returned about 21%.
Okay.
And then over a 5-year period, it's averaged somewhere around 19%. So wow. I'm not predicting exactly what's going to happen, but
sure.
But exhale a little bit, because we've been through bad times like this before and things have turned out okay.
And Bernanke even said the recession might be over, or beginning to be over by the end of the year.
Yeah, and people need to know the stock prices move 6 to 9 months ahead of economic data, Scott.
Oh, that's important.
Yes, it is.
6 to 9 months ahead of economic data.
Right. So if we think things are going to get better, well, this might be a time to start getting invested.
Okay, good. Before you go,
yes,
I want you to tell us about this article in Sports Illustrated about athletes. It's very interesting. That, you know, athletes like everybody else, they've lost money in the market. They've lost money too. Tell us about this real quick.
There's an article out. It just got published yesterday, and fortunately, I was featured in the article, which is nice.
Yeah.
And what it really does is it looks at the anatomy of how these athletes go from having so much money to maybe not having as much, and some of the mistakes they make. And the key here is that there's a little athlete in all of us. And the first thing that they do is they over-allocate into tangible assets. Sometimes they think that tangibility of assets, you know, somehow there's credibility in that. So there's an over-allocation. They trust people that they shouldn't trust,
right?
Which is just, you know, in a lot of cases is not a good situation.
Yeah.
Divorce. A lot of these people get married very early on, and they get divorced, and they lose quite a bit of their wealth. And then the fourth point is that they think that the good times are just not going to end. All right? And these careers don't last very long.
You're exactly right.
So the article is out in this week's edition. I'm really proud of it.
Well, congratulations for being in it.
Absolutely. Thank you.
And of course, you're successful anyway. Thanks for getting up early.
Absolutely. It is early.
It is, especially early for Ed. Hey, listen, if you want some more information, you can go to our website, cbs11tv.com. Just click on Survive in '09 icon. Ed, thanks.
Thank you.
Appreciate it. Good to see you again.
Absolutely.
Okay. Health news this